Hey everyone, we're just going to wait a few minutes for people to start entering the webinar. Awesome, but I see a bunch of people trickling in, so we'll get underway. I want to welcome everyone to building an effective investing process, a 10-point checklist with Fiscal AI. I'm Brett, Director of Strategy here at Qtrade. I'm going to be your host today, and we're super excited to bring you this masterclass on investing with our friends at Fiscal. Before we get going, I'm hoping you can take a moment to see the disclaimer on your screen here. And so we want to remind everyone that this information that's presented today is for informational and educational purposes. So it's not intended to provide specific advice about or without limitation, investment, financial, tax, or similar matters there. A few more quick housekeeping notes before we get going. So during the webinar, your camera and mic are going to be automatically turned off, but we do want to hear from you. So please make sure to share your comments or feedback using the Q&A feature. Another quick note, video recording is going to be provided post-webinar, so you're going to be able to rewatch the content here. And also, for those of you who were among the first 100 Q traders to sign up today, we're going to be providing you with free access to Fiscal AI Pro. You're going to be receiving an email as soon as we can get them out with a promo code and access link. So I'll guide that will be as soon as tomorrow or maybe as late as next Tuesday. So keep an eye on your inbox there. And lastly, your feedback is very important to us. So a survey is going to appear on your screen at the end of this webinar, and we'd love if you could take a moment to please fill it out. So before we get to the main event here, just some quick background. I think, as you know, at Qtrade, we've been super focused on ensuring that our clients are empowered with the best on-platform investment tools and decision-making supports in the Canadian market. But sometimes we come across a service that someone else has built that's just, so good that we want to make sure our clients have it on their radar too. So that's why we've partnered with Fiscal AI. They've built an all-in-one investment research platform that combines institutional grade financial data, analytics, and conversational AI. So it's a very powerful way to do the in-depth fundamental research you need to make well-informed investment decisions. So I know I use it in my process all the time, and we're happy to share it here at Qtrade. Now, we're also very lucky to have Fiscal AI founder and CEO Braden Dennis here with us today. And Braden's a pretty busy guy because, in addition to running a successful Canadian fintech company, Braden's also an accomplished podcaster. He started some of the Canada's top business podcasts under the Canadian Investor Podcast Network. He's also very in demand. I think, Braden, you were at the Money Show in Toronto a couple weeks ago and speaking to a Rogers Center sized crowd at Blossom Social's investor tour over the weekend. So thanks for making time for us here at Qtrade. And with that, Braden, I'll turn it over to you.
Okay, brilliant. Well, thank you, Brett, for the introduction. And I massively appreciate the Qtrade team for not only for, giving us this opportunity, but also, partnering up on the tool. And, I've been speaking to Canadian investors, self-directed professionals for the better part of 10 years on the Canadian Investor podcast. And during that time, I wanted to try to build a tool that I wish I had available. And along that process, it turned out a lot of other people wanted it as well too. So now we serve, you know, over 100,000 active people on the platform, but also, you know, five, six-ish thousand paid users, over 30 professional institutions and fintechs that'll consume our platform as well via API or through a partnership like this. And so, yeah, when they asked me to do a webinar, I thought maybe a good way to show off the platform, but also be useful as not just a plug for what we're doing, but also helpful to individual investors, is just go through my personal investing checklist of 10 things that I look at every time I look at a company. And then I can demo, how I do that right on the platform as well. So I believe I can just share my screen, Brett, on the platform as a webinar participant. If this works, this should work. Okay.
Perfect.
All right. So, who am I? As Brett introduced, I am the co-founder and CEO of Fiscal AI. We are previously known as FinChat, so people might be more familiar with the FinChat name. We did a rebrand back in the spring of this year and also of the Canadian Investor Podcast. Um, we've raised now 13 million USD to date from very prominent investors here in Canada and New York to continue to build out the platform, build out our data product, and keep going. So I wanted to, this is kind of my favorite slide on describing the world of financial data. And when I say financial data, I just mean the info, the metrics, the financials, the profit and loss, the income statement, the balance sheet of every public company. And if they're a public company, they have to disclose this information. But even if it's in the public domain, it hasn't been necessarily democratized in a way that is accessible to everyone. And historically, and now even today, there's basically the you can only pick two triangle, you know. And in this pick two triangle, you can get either accurate data, breadth of coverage, which is just a fancy word for saying we have all of the data for every company, and reasonable cost and reasonable terms. And so the old way is you get to pick one. You get the elite institutional tools and you get really wide coverage, but you're paying out the nose tens of thousands of dollars a year. Or, you have wide coverage and you have reasonable cost, but every eighth number is wrong. And that's no good either, right? And so we're trying to reinvent the space and have the opportunity to get all three. And these are absolutely paramount for people to get this. And the reason why you can only get this kind of you only pick two is this has all been done manually. Filing comes in, left screen database, right screen information, punching in the information. And that leads to a lot of errors, a huge delay to aggregate the data from when it's actually available in the public domain, and very aggressive and expensive terms. And so we have this kind of institutional accuracy, 3 to 8 minute delivery after earnings, and less than half the cost of the competitors. Sometimes 1/10 if we're talking about the most expensive tools. And so enough about that. I want to go through my 10-point investing checklist here. And these are things that I'm looking at with every single company. And I was just looking at a company I've owned for a long time. I was like, okay, we're just going to use this for today's video. A company that everyone is very familiar with. It is a large company. It's been around a long time. And the reason I'm picking them is because their financials are so clean. They go up and to the right, and they're extremely profitable. And I think that there's very little edge cases with this company, and I thought it was a good, clean one to pick. And that company is Visa. So today we're going to go over the business overview, the growth, some of the KPIs that drive the business, their pricing power over time, their moat and competitive advantages, and how I think about that for this specific company, valuations, margins, estimates looking forward. Then we're going to look at investor materials like slides, investor day stuff. And then we're going to think about looking at where you'd find the earnings call. So this is not a pitch on Visa stock by any stretch. It is just one. And maybe if we have time, we can go through another one and how we think about that as well too. Maybe we could take some recommendations from the audience. So let's get into it. So number one, a business overview. Now on the overview, so how to get here on the platform is I typed in Visa. Ticker V, click on it, boom, loads this up. Now, most people are very familiar with the company, and I'd want to really, really understand what the business does, because all the metrics for any business can look fantastic. Oh, the stock chart looks great. Blah 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 blah. What does the business really, really do? So that when volatility hits, the stock goes up, the stock goes down, there's good news, there's bad news. Do you have real conviction and understanding in what they do? And I think this is actually a really good example, Visa here, because most folks think that they collect, 2.5% on each transaction. I think that most people think that they collect a 2.5%. They collect like on average about 0.13%, tiny, tiny fraction. They're actually the most of the transaction is actually in terms of the economic take rate is from the banks because the banks are the one that lend money. So for this company, I'd want to know right away first, Visa actually does not lend any money. You do not owe Visa a dollar when you're on your when you owe money on your credit card or when you use a credit card and lend money. So that is done from the banks and they're collecting a tiny fraction. Okay, that's important for me to know. Okay, so I understand now the business. Um, let's look at some growth numbers. Okay, so there's a company statistics here. You can kind of get a good understanding of what's happening. There's kind of this bull say, bear say for each company, and then also what's happening. But let's look at growth rates. So for me right now, I want to know how has the company grown its top line? And we have 20 years of data. So 20 years of revenue growth here. You can see that the kind of post 2020 bump in cashless transactions. Okay, that looks fantastic. Let's also look at gross profit, and then let's pull up kind of an EBITDA number. Okay, so the growth rates here, fantastic, of course. Compound annual growth rate of 14%, 15%, and 20% on earnings before interest, taxes, depreciation, and amortization, which is a form of profitability. And so you're looking at this and you're going, okay, fantastic. I like to see these numbers in the double digits, over 10, 12%, for me to compound over time. And so these three things, fantastic. Growth looks great. But how do I relate those to the actual business KPIs? I can find total revenues, gross profit, EBITDA, whatever operating income and balance sheet metrics. I can find all of that very easily on the platform. But what about the actual things that makes this business tick? And the thing that I like to look at for this business is payments, of total transaction volume. So this is bespoke to Visa. And we do this, it's bespoke for every company. So if I'm looking at Netflix, it's number of subscribers. If I'm looking at Spotify, it's monthly active users and how much each user is paying in each region. If I'm looking at Airbnb, it's the number of nights stayed on the platform, right? And so these are the things that the company discloses. They're usually in presentations. They're sometimes in the earnings call. They are sometimes right at the top of their press release, but they are core to the business. I know as a Visa shareholder, I want to see this number consistently go up because this is core to the business. The total amount of transaction volume moving on the platform. And so that's in the segments of KPIs. I can also see things like, okay, US versus international. Okay, so let's stack these up. Okay, you can see US versus international. The US is this purple line and the orange line is international. You can see, okay, that's pretty interesting. 10-ish, I guess like 13 years ago, it was like 50-50. There's slight edge on US versus international. But look at the spread. The growth rate on the international has actually been much, much higher. And this makes sense, right? There's more penetration growth available outside of US, Canada. North America has a lot of penetration with credit cards. I could even do something like this, common size. This is pretty cool. So I'll do this. I'll remove these, stack these up. Now I'm looking at the same metric in terms of percentage. So before, again, it was close to 50-50, and now you can see over time. I like doing this for Google stock right now. Google is a company where people are worried that the search business is going to get disrupted. And I share those same concerns actually a little bit too. But you'll see if you do this for like search and non-search for Google, which we can maybe do some other examples outside of this company later, you'll see that the business is actually now like 50% non-search across cloud, across everything that they're doing, the other bets, the self-driving stuff, the Google workspace, like, we're a subscriber of Gmail and these kinds of things, right? Pricing power. Okay, number 4, pricing power. This is something I'd want to research over time on how the business can continue to raise its prices and have a growing, maintaining profitability through everything. Okay. So what I'll do is I would go into the company's financials, and what I would want to see is gross margins. Okay. Now, for a company like this, they have been able to maintain unbelievable profitability. And this speaks to some competitive advantages that we'll talk about in the future, but they're able to maintain their profitability and their gross margins on what they're making in each transaction extremely well. Now, I'll also see that I think they disclose their take rate. Oh, they're not disclosing the take rate anymore. I guess they don't want the regulators all over them. Understandable. And so with this type of thing, you're seeing over time that the company is able to maintain its pricing power over time. Another example of pricing power is Apple. Okay. Apple gets to decide what the iPhone is inside of a boardroom meeting. They don't have to decide what the price is based on some commodity. And that's incredibly important for a business over time to maintain its position in the market and continue to make more money over time and be resistant against inflation. Visa has pricing power against inflation because they absorb inflation. If something cost $12 before and now it costs $20, every time I tap that card, they're collecting a higher transaction volume over time. So they are very inflation resistant. Number five, competitive advantages. Now, I'd want to probably look into some research points. Okay. Of course, there's a bug on the live demo. Let's, oh no. Oh, don't you love live demos, folks? That's great. That's just wonderful. We might be switching companies here on the live demo.
It
That's
happens.
great. That's great. Okay. All right. Well, we will fix that immediately after the call. On the research tab, you're going to get professional research from Morningstar. We even do an AI one and other professional analysts that comment on the business's strength over time. And so for any company, you'll see what the competitive advantages are. And if we go back to Visa, just thinking out loud myself as an analyst, thinking really hard to displace this two-sided network effect, right? You have everyone that has cards, you have people that accept the cards. If I go create a new card, I'm going to call it the Fiscal.ai credit card network, and I give everyone a card. Okay, so everyone on this webinar, you all have a card now, and then you go to use it and you realize no one takes the card. That makes it completely useless. Or if I am a merchant, okay, I sell running shoes and I don't want to pay credit card transaction fees anymore. So I'm going to start the new Fiscal.ai running shoes way to accept money. And then I'm going to say, okay, we accept this new form of payment. We're going to give everyone a 2.5% discount because we don't have to pay anyone else now. Well, none of the customers have that method of payment. So you're stuck with a cold start problem. And those types of cold starts are generally common in two-sided networks where everyone has something on this side and everyone has something on this side, and that is a common way to transact. I believe that the only real disruption possible to the networks, for example, is some sort of alternative currency, potentially Bitcoin, potentially some sort of other cryptocurrency. We'll see. I mean, that's been a thesis for a long time. I've owned Bitcoin for a long time, but I haven't yet seen it mainstream adoption in terms of payments. Valuation wise, okay, is this a reasonable price to pay for the business? Okay, so I know it's growing double digits across the board here. That's fantastic. They've grown the dividend over 16% per year the last few years. Trades at 33 times trailing earnings and 27 times next year's earnings. And so where those next year's earnings are found in terms of estimates, we'll load up the estimates tab here. It's always a little slower when I share my screen. The live demo is really on fire today. you'll see over time how things have changed historically as well as moving forward. And so these are the types of estimates that you're seeing move forward. So back to my valuation question, 27 times is expensive. And if I go on other metrics, it's very mature, profitable companies. So I deem that a useful metric to use, PE, price to EBITDA, EV to EBITDA, price to operating income, aka EBIT. Those are all reasonable metrics to use. And so I look at the price of the company trading at 22 times forward EV to EBITDA as expensive for something growing at this rate, but reasonable. It's kind of in that strike zone. So if you're new to valuing companies, there's lots of ways to value companies. There's a lot of valuations. You can actually build out a model if you want to think about what the valuation should be today for what you think the company is going to be worth in 5, 10, even longer time periods. Valuation is an art. But getting all of those numbers here in the company statistics or inside of the financials, I can even do something like this. Okay, let's use EV to EBITDA. This is over time the valuation of the company. Let's put in the average. So it's trading in line with its historical 10-year metric. It says 24.88 is the average. Right now it's 25.58. That's pretty much right on the money in terms of in line with its historical average. So the market is pretty evenly excited about the future as it has over the last 10 years. So it's not elevated nor depressed. I believe that to be a reasonable price to pay today. We talked about margins actually, so we skipped that and we looked at estimates. The way to think about estimates is you can obviously look at each company estimates here line by line, or in the top here, and there's an LTM dragger. I can go up here and go historical, but now I can also pull in forward estimates in with historicals. So the last 12 months is here in this bar, LTM. This was 2024. And then this is what estimates for on average, I believe there's like over 30 analysts that cover the name. This is what they have modeled out over the next 3 years annually. If I pull it out quarterly, I'm going to see a similar story over time for the next 5 quarters. Let me pull this forward. I think it's 6 quarters. So I'll see this over time. And I can do that for other metrics too. Let's do operating profit as well. Again, I can get it in a table, but I can also get it visually here. So people think the future looks similar to the past with this business, and that's usually what I'm looking for. I'm looking to buy something that I have some reasonable estimation of what the next 20 years look like, or at least the next 10 years look like, and it not be some sort of gamble. Investor materials. Okay, so when it comes to investor relations content, looking at the transcript, let's just go to their Q3. So this was their Q3 2025 fiscal quarter, and I'm going to get their earnings call. I can actually listen to the call right here. I won't play the audio because we're obviously doing a webinar, but I can play the audio and listen to it, do something else while I'm working. I can pull up the report and I can look at my slides as well as get AI summaries on top of these things. Okay. So for the transcript, I can say, just kind of one shot AI summary, this whole thing. Of course, the whole everything breaks for today's demo. That's just fantastic for everyone here on Qtrade listening. And this will easily AI summary one shot everything in here, as well as you can get custom summaries for the transcript, the report, and the slides. And this will all be fixed in approximately 5 minutes after the call. So anyone who's built software before, they know that things only don't work when you're showing something to someone. And last, like listening to the earnings call, like by playing the audio. Again, I'm not going to do it here on the webinar because it'll be a long time, but listening to the earnings call is always something I will do as part of a 10-point checklist before I invest in the company. And the reason for that is I want to hear directly from management. I want to hear the tone. I want to hear how they answer investor questions. Are they defensive with investor questions? Are they excited about the future? Are they trying to sandbag the future? You see some companies do that as well. And what are they actually working on? I mostly am interested in listening to the Q&A from investors. So you'll see here, these are investor analyst questions, and you'll get the actual management team respond to them. That's going to be where the juicy stuff is, because they're going to ask about real challenges. They're not just going to tell you how great the future is. So that does it for a 10-point checklist. Of course, when you're looking in the fundamentals of businesses, there's lots to think about. These are things that I would not go without. That would be how I phrase it. These are things I wouldn't invest without at least doing these 10 things.
Awesome. Awesome. That was incredible, Braden. And as you were going through your intro, I was having flashbacks. I'm a CFA by training and just dragging and dropping data over from companies' filings and reports and pulling my spreadsheets together. It's nice to have it all just in one place and able to be analyzed and displayed visually. And having an AI summary dropped on top of it makes things incredibly fast too. So appreciate you walking through that with everyone. We have some Q&A coming through the chat. So Braden, on your side, if you can see the Q&A tab, you could probably take a look directly there too. There's some questions about, um, there's some specific questions about the things that you were going through on screen there. But we also have some more general questions too. So one of the first ones there, again, I don't know if you can see it on your side, but was to take a look at individual product growth for companies. So when you're looking at Google and when you're looking at those unique KPIs, can you
Yeah.
see like each division or each product metric? I think that was the gist of question number one.
Yeah, that's a fantastic question. And specifically for this company, Um, you absolutely can. So when we set out to build this tool, one thing that we noticed right away was, I was a big consumer of professional investment research, and I would see screenshots from Bloomberg of historical valuations over time, and then I would always see people manually in Excel build out their KPIs or revenue segment breakdowns because this data was very hard to get. So today I employ 20 full-time analysts that help us aggregate this financial data. Like work for us full time. They help train our AI in terms of how to aggregate the fundamental data at scale. But here's an example, right? So this is how the company reports in the case of Google, in your question, across search, YouTube, what they call Google Network, subscriptions, platforms and devices, Google Cloud, other bets. Other bets is like the Waymo division would be inside of there, so the driverless cars, and then they have this other weird segment for hedging. But yeah, absolutely you can. And one thing that's nice is if I just click all of them, I can stack them up as well too, right? And I'll go to 2017 when the reporting was all like for like. Because companies change their reporting segments all the time. It's just one of the things we can't get away from with public companies. We're at the mercy of their reporting. And so you can see here, search is still, a good chunk of the business, but you're seeing YouTube really take off. YouTube's doing 38 billion in the trailing 12 months. Google Network subscriptions and Google Cloud also been quite the story. So, yeah, absolutely. You can see those types of breakdowns. I think this is probably one of the most useful parts of the platform because, look, if you're owning individual companies, you need to be well aware of this stuff. And a lot of times with these large companies, they're looking for new divisions to help them continue to grow while maybe, the golden goose is under attack. Like Google search could be under attack, right? It's still growing, but I think people's habits around change are going to change aggressively, as well as they have to innovate themselves with the AI responses. So this is really helpful to see, okay, what does the rest of the business look like? What are the growth rates? And yeah, hopefully that answers your question, Nathan. One that I did want to take here is able to compare valuations and other KPIs against competitors. So specifically, they're asking about Visa and MasterCard. Now, this is one thing I really wanted to show you too as well. So I have a bunch of tabs that I look at for different different sectors. And so I've built out one here for cloud, and I've also built one out here for payments, which is very specific to what your question was. So I've graphed out total transaction network volume across Amex, Visa, and MasterCard to just see transaction volume growth over time from basically from pandemic time forward. See who's taken the most market share over time in terms of growth. Amex actually been leading the way. It is the smallest of the three in terms of transaction volume, so it does kind of make sense. But this is a really good way to comp, and I can do this with valuation ratios, stock price. I like using it for KPI specifically. So that was an anonymous had a question about comping KPIs.
Awesome. I'm going to consolidate a few here, Braden, and we'll kind of rapid fire them.
Sure.
There's questions about just access to things on the platform. So I'm going to
Yeah.
knock off three here. ETF information, short selling info, and then earnings call information, how widely available that is too.
Okay. So the first one was ETF data.
ETF data, yeah.
Okay, yes. We do have ETF data. We're not particularly, I'll use SMH because Vanek is a customer of ours, and I love this ETF. It has over, I think it has over 100 billion of AUM now. This is the semiconductor ETF. It's been obviously a monster winner. We'll show you different metrics over time. You can compare it against like SPY, for example, or with Canadian ETFs as well too. I'm just using ones that probably people know. You'll see all of the holdings, how much of the portfolio it is, what the market value is, shares, and changes over time too. Has there been changes in the portfolio over time as well too? So we do have ETF data. Is it as in depth as we do for individual companies? I will say no. So if you're strictly an ETF investor, the platform is not going to be like the best fit. Just to be 100% honest on that, but we do have the data to somewhat be complementary. And then from there, you can look, I see Taiwan Semiconductor is in the ETF. Let me dive into that. So I would say it's great for seeing the holdings and getting ideas, and then go research the company inside of here. I would say that's the main use case for ETFs. Short interest. We do not have short interest. Short interest is one of those ones where you got to buy it directly from the exchange, and it's expensive. It's very expensive data, unfortunately. So we do not have that metric. And then the last, Brett, was
Earnings call info, just general information there.
yeah, earnings calls. So we cover about I think 15,000 companies inside of here. So that's everything in Canada, everything in the US, Europe, all large companies outside of that is that universe. So unless it's very, very niche international microcaps, you're not going to run into we don't have this content. I think you'll be sorted.
Awesome.
By the way, I just got a note that there was a cloud outage between 12:10 and 12:20
Good
during my
timing.
demo, and I will blame it all on them.
That's hilarious. Um, I appreciate everyone. We got a lot of questions coming in, which is great. A lot of them are about specific things to the platform, and we're going to try to get to as many as we can in our time slot here. There's also a lot of good questions coming in too about kind of your general thoughts on some broader topics out there, Braden. So one of the ones I wanted to get to is what's your sense about the move to end quarterly reporting, and what kind of
Mm,
impact might that have on the on making informed investment decisions?
yeah. Well, for some context, there are many companies. For companies here in the US, SEC, you have to be a quarterly filer. This is the current state. In the UK, for instance, they only have to report halves. So you'll do H1 2025, first half 2025, and full year 2025. So they'll report twice. So there is a precedent for some companies not reporting quarterly around the world, even very large companies. Some companies report but don't have an earnings call. For example, Constellation Software in Canada doesn't do an annual or doesn't do a quarterly earnings call. They don't have to. A lot of investor relation stuff is voluntary. I think it would be a misstep and a step backwards in terms of transparency to the public to reduce the amount of reporting. I look at Costco as like a just wonderfully run public company and very transparent with shareholders, and they do monthly updates. They do a monthly sales update. You can listen to the call. They talk about what's selling, what's not. And by the way, this is really useful info for people who are in CPG. Like a lot of people tune into this monthly report because Costco moves so much CPG. And so I am more, I don't think every company needs to report monthly. That's overkill. But I think going from quarterly to annually or H1, H2 would be a step backwards in serving the public. And the public and everyone is able to buy and invest and hold these companies. So I would prefer we get more data than less.
Yeah, I hear you there, and I think uh, a tweet from from President Trump last week was what sent everyone scrambling in this topic to the top of
Yeah, he was referring
everyone's
to how
list.
UK companies just report twice a year, and
Yeah,
look, I mean, there is something to be said about managers and CEOs too focused on quarter to quarter and just trying to make shareholders. And the best companies are focused on multiple decades, and they know that not every quarter is going to be up and to the right all the time, and they face a lot of pressure from investors to deliver on a quarterly basis. That being said, you don't have to own the companies that are only shareholder friendly in the short term. I'm trying to own the ones that are shareholder friendly for the long term.
yeah, no, it makes a lot of sense. Another broader question that came through, which is a good one here. So it says Fiscal AI, you have AI in your name. So we want to know how you see AI changing the investment process in the years ahead.
Yeah. So the reason that our company is called Fiscal AI is, well, we just talked about every company reporting their fiscal financial results, um, and almost mentioned in almost every earnings call. And we use AI to see all these numbers here, Brett. Every single one was aggregated accurately with our data AI pipelines. And we have exceptional accuracy. And we even show right to the source filing where these numbers came from directly, which is extremely powerful. And that's really helpful. And you'll see, like, here's the quarterly number back to so 63,205, 63,205. There it is right there between net sales and membership fees. We'll even do the as reported, just the way you see it in the company's reporting here. So net sales, membership fees, total. Nails it every time, right? 61, 12, 40. And so my view on AI is I think to answer your question, my view on AI in the last really since the ChatGPT moment, which was November of 22, is extreme focus on the chatbot because the chatbot got instant product market fit with so many people. It was the first time people could use a product and never have to learn how to use it. You learned how to use it when you learned, how to speak your native tongue as a kid. So that's why it got so much adoption. And for us, AI means getting all this data for investors at a fraction of the cost and not having to go to the manual data collection that costs so much money. So for us, this really democratizes the financial data landscape in a major way. So that helps investors reduce costs in their types of tooling and the data feeds they purchase. It helps brokers save a lot of money too, because well, you come from the brokerage world. It is data is one of the most expensive line items that you will have for the company, and so we think that yes, software has democratized this layer to have awesome platforms like Qtrade to do your money management, and software democratized this user experience to exist. But for us, AI is actually aggregating the data at scale and reducing costs that way, as well as not everyone wants to listen to the monthly sales update. And sometimes you just want to one shot it with AI or custom summary it, or, ask about one specific line item. And that saves you a lot of time in the investment process. When it comes to this structured data aggregation, it is a huge win. And then the consolidation and summarization and quick speed to insights on unstructured data, aka text, it's extremely useful.
Yeah, that's a big way that I use the platform today too, is like you said, all of that unstructured qualitative info, it's hard to
Yeah.
digest in if you just throw that earnings call on your AirPods and take a listen, but being able
For
to
instance, this was
parse through it.
generated today for us. No one wrote this, right?
Yeah. Yeah, no, exactly. That was one of the questions actually that came in here too, was there's a lot of data, quantitative data, numbers on the platform, but
Yeah.
obviously the qualitative side factors in hugely into investment decisions as well. How do you kind of weigh those qualitative factors, things like, management quality or risks, against the numbers in your process?
I would consider myself a quality investor, which means that I am looking at the business fundamentals first, right? And so, we're on Costco, so let's use an example. This is obviously an incredible business, extremely dominant in its space, has amazing ability to retain members over time and be really valuable for customers over time. And you can see those types of things come out in the financials. So to answer your question, this is a business that has, in my broad thesis, amazing retention of memberships, oversubscribed every location that they open, and will continue because of their economies of scale and the membership model to offer best in class pricing for their customers. And this comes out, right? So I just said best in class pricing. Okay. They have on average between a 13 and 12% gross margin historically. I think they try to have it around 12 and a half. So they're right in that mix. For instance, Walmart's like 25%, taking way more gross margin. Costco has set out to purposely have low gross margins to be the most valuable offering for their customers when they're buying in bulk. Okay, so that is a thesis I have, and now I am verifying it with data. Okay, now let's look at the some other things like membership revenues over time. Okay, this is not going down. Right? People are getting more and more value over time, and the membership fees continue to climb. I think renewal rates are like 97% or something. I don't know if they actually do that. We'll do total card holders. Yeah, so you can see the amount of members going up over time. So that verifies my thesis as well too. I am not a shareholder, just disclosure, but I do think it's a wonderful company. So the data is fact and helps me decide and verify. I'm investing, and then I'm going to continue to verify my thesis over time. The quality aspect of the company and knowing the company inside and out is so important, so that when a drawdown does come, because they will come, drawdowns come, volatility comes, broad market sell-offs come, you can decide if it is a trap or an opportunity because of your understanding of the business.
Yeah, no, makes a lot of sense there. Um, I think we're getting close to time and we still have questions coming in. So I appreciate everyone's engagement. What we're going to do there is we'll try to aggregate those in themes and we'll try to address some of them in our follow-up email here as well, which will come a few days following the end of the webinar. But unfortunately, we're going to have to wrap things up there in the essence of time. So I do want to thank Braden and just want to remind everyone too, like the demo today was purely for informational or educational purposes, so not intended to touch on any recommendations or financial advice. This was really about showcasing a good, strong fundamental research process and how you can execute that through a great Canadian grown tool like Fiscal. So before we go, I also do want to remind everyone that through our partnership, Fiscal is actually offering all Q traders 15% off to all their paid services. The way you can access that is by logging into your Qtrade account. You go to the Partner Services tab, in the Qtrade platform. And you're going to click on the Fiscal AI link. And I do want to remind everyone to make sure that you read all the disclaimers and disclosures while clicking through before doing so. And so, yeah, wrapping up, I mean, a big thank you to our presenter Braden today, and for everyone here for taking time to attend the event. We'd love your feedback. So when the webinar ends, you're going to see a survey pop up in your browser, hoping you can just take a few minutes to fill it out. Or you could also fill that out when we send the post-event email a little bit later, which will include a link to the recording and some other info. And then, yeah, just as a final reminder, if you were among those first 100 Q traders to sign up for this webinar, we're going to be providing you with free access to Fiscal AI Pro. So you're going to be receiving an email with a promo code and access link. And again, that's going to come, we're hoping as soon as possible, but I will kind of guide toward next week at the latest. So from all of you, all of us at Qtrade, at Fiscal AI, I want to thank you for attending our webinar, and we hope you enjoy the rest of your day. Thanks all.
Thank you, everybody.